Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 14th, 2026, and we're diving into Citigroup's fourth quarter and full year 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Citigroup's performance, especially given the significant developments in their latest earnings report.
Revenue and profitability overview. Let's start with the top line. Citigroup reported a net revenue of $19.9 billion for the fourth quarter of 2025, which is a 2% increase compared to the same period last year. John, can you elaborate on the factors driving this growth?
Absolutely. The revenue growth was primarily driven by strong performances in banking, services, U.S. personal banking, and wealth segments. Despite a decline in the all-other category, these areas showed robust growth, contributing to the overall increase. Excluding the Russia-related notable item, revenues were up 8%, which is quite impressive.
And what about profitability?
Citigroup's net income for the quarter was $2.5 billion, down from $2.9 billion in the prior year period. However, when excluding the Russia-related notable item, net income was $3.6 billion. The adjusted earnings per share came in at $1.81, beating the forecast of $1.65 from 8 analysts, which is a positive indicator of the company's profitability.
Operational efficiencies and future outlook. John, let's talk about Citigroup's operational efficiencies and their future outlook. What are the key highlights here?
Citigroup's operating expenses increased by 6% to $13.8 billion, driven by higher compensation, benefits, and technology expenses. Despite this, the company maintained a strong Common Equity Tier 1 (CET1) capital ratio of 13.2%, which is well above regulatory requirements. They returned $17.6 billion to shareholders through dividends and share buybacks, showcasing their commitment to shareholder value.
And what about their future outlook?
CEO Jane Fraser has set a target of achieving a 10 to 11% return on tangible common equity (ROTCE) for 2026. The company is entering the new year with visible momentum across its businesses, aiming for improved returns beyond this target in the coming years.
Segment performance and strategic initiatives. Let's delve into the performance of Citigroup's key segments. How did they fare in the fourth quarter?
The services segment reported revenues of $5.9 billion, up 15%, driven by Treasury and Trade Solutions and Securities Services. Markets revenue was slightly down at $4.5 billion, primarily due to lower fixed income and equity markets revenues. Banking revenues surged by 78% to $2.2 billion, thanks to strong growth in corporate lending and investment banking. Lastly, wealth revenues increased by 7% to $2.1 billion, with Citigold and the private bank leading the charge.
What strategic initiatives are they focusing on?
Citigroup is focusing on deepening client relationships, launching new partnerships, and enhancing customer engagement through innovative products. These initiatives are expected to drive further growth and strengthen their market position.
Risk management and notable items. Risk management is crucial for any financial institution. How did Citigroup manage its risks this quarter?
Citigroup's provision for credit losses was $2.2 billion, driven by net credit losses and a net allowance for credit losses, ACL, build of $30 million. The Russia-related notable item resulted in a $1.2 billion loss, impacting their net income. Despite these challenges, the effective tax rate was approximately 34%, reflecting the limited tax benefit of the Russia-related loss.
How is Citigroup addressing these risks?
Citigroup is actively managing its credit portfolio and optimizing its balance sheet to mitigate risks. They are also focusing on improving credit quality and adjusting their strategies to navigate the macroeconomic environment effectively.
Key takeaways. In summary, Citigroup has delivered a solid performance in the fourth quarter of 2025 with strong revenue growth and profitability. They have effectively managed their capital and returned significant value to shareholders. John, any final thoughts on Citigroup's investment prospects?
Citigroup's strategic initiatives and strong capital position make it a compelling investment opportunity. Their focus on client relationships and innovative products positions them well for future growth. However, investors should keep an eye on macroeconomic factors and geopolitical risks that could impact their performance.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Citigroup's performance in the comments below.